In this week's episode of the Stockscores Market Minutes, I'm going to show you how to swing trade this crashing stock market. I'll then do my regular analysis and give you a sense of if there is more crash to come or if the market is in fact bottoming and likely to move higher. We'll do a market scan in search of opportunities, a day trade of the week on WYNN. All right, so how do we swing trade this market crash? First of all, what is swing trading? It's a little different than day trading. When we swing trade, we are trading actively, making short-term trades, but we're actually holding them at least overnight, and typically for a few days, sometimes even a few weeks. It's a relatively short-term approach, but it's not day trading where we're out of those positions before the end of the day. Now, because we have got so much volatility in the market, there is an opportunity for people who can maybe invest 30 to 60 minutes a day looking for opportunity with some of the tools that I'll show you. You can identify this pattern that I'm going to show you in just a moment that is very good for finding some really good trading opportunities. I've talked a little bit about these in recent videos, but I want to revisit it because I know that some of you have some time on your hands. You're at home a little more these days, and perhaps you can make some money by taking advantage of this market volatility. So I prefer, when I'm swing trading, to watch either the 13 or the 30-minute chart. I'm always asked, why the 13-minute chart? Well, I like that time frame because there are 30 13-minute bars in a day. So when we look at a chart, if we have our chart set to a 13-minute chart, there will be 30 bars in a day. If we are on the 30-minute chart, there will be 13 30-minute charts. We have a trading day that is 6.5 hours long. And this will make a little more sense when we look at a chart. So what I'm looking for, very simple pattern. I call this my crash reversal pattern. I've talked about it in recent weeks. But it's to look for a break of a downward trend line from a rising bottom with strong price movement up on either that 13 or 30-minute chart. We want stocks right now that are really oversold, that have really been beat up because of the crash, and are starting to show signs that they are turning around and making a little bit of a comeback. Now, I don't expect that they're going to make back all of the losses. I don't have to. Some of these stocks are moving 30, 40, 50% in just a few days because they went down too far. Now, we want to also consider the trend of the overall market or the sector. So you don't want to be buying stocks if the S&P 500 is moving steadily lower. However, what we saw this past week was that while the market maybe wasn't doing much, the energy sector, oil and gas stocks, were doing quite well for a few days. And so it's either the overall market or the sector of that market. And in this case, with some of these examples I'm going to show, was the energy sector. Now, it's very important to use responsible risk management. You have to plan for losses. You're not going to be right all of the time. That's the nature of trading. You will be wrong some of the time. Everybody repeat that. I will be wrong some of the time. It's inevitable in trading. And therefore, we need to plan for what we are going to do when we are wrong, how much of a loss we are going to take, and let that determine our position size. Now, this all makes a little more sense when we start looking at some charts. So these are stocks that either I've traded in recent days or we've found in the Active Live service on Stockscores. I'll show you how to learn more about Active Live in a moment. For now, what I want to highlight is the pattern. So we have the downward trend line. And again, just notice that this is a 10-day, 13-minute chart. You can get these charts at Stockscores.com. We have a rising bottom. So what do I mean by a rising bottom? The market was going down and it stopped going down. It makes a little V. Stops going down, starts going up, makes a little V. Well, we can draw a line across the pointy part of the V, and we can see that they are rising from left to right, and therefore we have a rising bottom. We can also draw a line across the peaks, which we call our inflection point tops. You can see there's little peaks up here, sort of upside down Vs. Draw a line across it, that's our downward trend line. All right, what we want to look for is a break of the downward trend line from a rising bottom. Very simple. And so on FANG, we had that on March 30th. And then we had another one either the afternoon of April 1st or probably more clearly the morning of April 2nd this past week. And you can see that these stocks then moved up quite nicely. Now, it doesn't look like a lot, but keep in mind that's a move from $23 to $27. That's what, 17, 18% in less than a day. And then here from a little over $25, peaking out at 33, more appropriately probably in around 31, 32. It's a big percentage move again. You don't need to know anything about these companies. This is not about fundamentals. This is simply about trading the move of volatility and the change of emotion, the change of opinion that is happening very quickly in this market right now. Let's look at another example. This is another stock that we talked about. I bought this stock right in here when it broke from a rising bottom through resistance. So in this case, our trend line was horizontal, broke out and made a quick little run. Now, when you buy here, and we talked about risk management earlier, we have to plan to lose. So if you're buying it there on the breakout through this resistance from the rising bottom, you want to plan to lose at the last low point, at the last little floor price, and let that determine how many shares you buy. So in this case, we're buying at roughly 265, and our support price is at about 250. So let's call it 245 is where we're going to put our stop loss. That means we have 20 cents a share in risk. If we buy 1,000 shares, our risk is $200, and you should buy the number of shares that you are comfortable with when we think about risk. How much are you willing to lose? Now let's look at the second trade setup here. We had a downward trend line. We built a rising bottom, and then we broke from the rising bottom right there and went up very quickly within a day, and then the following morning peaking right up here. That's a move from $3 to $3.80 in about a day, one overnight hold. And so that is the kind of trade I think everyone should be watching for. We had some good opportunities in energy last week. Next week, maybe it'll be in another sector. Maybe it'll be in the travel-related stocks or the airlines or something like that. All right, let's get on to our regular market analysis, try and figure out where the market's going to go next. Starting us off with the S&P 500, I always look at the SPY ETF. It's very insightful for that. So we had the downward trend line. This right now, by the way, is a 30-day, 60-minute chart. We're looking at more short-term charts right now because the market's quite volatile. So we had the downward trend line. We broke it. We broke out from a rising bottom around the 25th of March. Then this past week, we broke this little upward trend line right here, and that's a bit of a concern. That leads us to think that we probably get a little bit of a pullback, and we have pulled back a little bit late this week. Now, I talked about this in a video that I did last Thursday. Sorry, I don't remember the exact date, but it was last Thursday from when I'm doing this video. And I talked about that likelihood that the market will pull back and build a rising bottom before it tries to recover again. So we're sort of working through that phase right now. We were actually pretty quiet this week in this sideways trading pattern. Not as much action as we've had in recent weeks, and that's building a foundation. What we want to watch for now is, are we going to break up out of this pattern or break down out of it? And that's going to telegraph the next leg of the move. If we break down, and that's what you want to watch for a breakdown through 244, 245 on the SPY, we may come back and test the lows at 220. If we break out, well, then we're probably just going to get stuck here at around 262, and then we'll see if we can ultimately break out and make more of a recovery. So for now, I think you have to just watch for that breakout of that sideways trading range. Now, looking at the longer term daily chart, this is the pattern I talked about in that video that I did last Thursday. I think the title of it was, Has the Market Bottomed? And what I talked about in that video is that markets very rarely make V-shaped bottoms. They don't go like this. They go through a couple of phases. And the first phase is that they break the downward trend line. We've done that already. The second phase is we try to build a rising bottom. So we have our low point here, and are we now building the rising bottom which we can bounce off of and get through that 261, 262 level on the SPY? If that happens, I think we're going to recover some more. I think it's going to take a little bit of time. We've sort of priced in this virus, but the market still doesn't know how long is it going to last. What is the full economic effect of it? We may get another wave of selling and not make that rising bottom, and instead break through that support. That's a very real possibility. If there starts to be some good news coming out on the containment of the virus, maybe it's not spreading so fast with all the social isolation that we're doing, well then we might get some stability here and ultimately break out. For now, I am neutral on this market, both long and short term, because we're stuck inside this little sideways range. And we need to look for a breakout from this little range between 244 and 261 to tell us where the market wants to go next. Looking at the Russell 2000, very similar pattern. We broke the downward trend line, and now the question is, are we building a rising bottom here, or are we going to continue down, go to new lows? If we do, we could see another wave of strong selling pressure. No problem, we can make money from markets going down. You just have to know what to do, either buying inverse ETFs, buying something like the VIX, or shorting individual stocks, which has been obviously very lucrative of late. On to the Canadian markets, and you can see something similar. We've broken the downward trend line. We're now building this sideways pattern, which is like building a foundation for the next leg of the move. Do we break up through 21? If we do, that's a bullish buy signal. If we break down through 19.5, well, we may very well test the lows again. So watch these market charts on that intraday time frame, a 60-minute chart, a 30-minute chart, and watch for the break. I'll keep you updated with my videos, so make sure you're subscribed to the channel. Click on the little notifications bell. Do that right now. Give me a thumbs up while you're there, and I'll keep you updated as much as I can. On to that longer term chart. This is the weekly chart of the TSX. You can see the huge drop. We have what we call a dead cat bounce candle last week, and that's a sign of stability, but I still think there's more work to be done. We need to break out of that short-term trading range that I showed you on the last chart. TSX Venture, as much as it has sold off and recovered, it still isn't showing much excitement. We need to get through this upper boundary and hold the lows. I think the lows hold, but I think we could be grinding sideways for a little bit short term. On to currencies. You can see lots of volatility in the US dollar. It started to stabilize somewhat after all this craziness right here. And I think we're just sort of destined to maybe grind our way slowly higher. You can see we're just trying to get through that historically long-term resistance, up above it a little bit, but I expect that there will still be lots of volatility here, and just keep an eye on that. It's not a real important indicator for the market right now. Sometimes it is, but right now it's not. Looking at the Canadian dollar, it's going to be heavily dependent upon what oil does. You can see the parabolic drop because oil is such an important commodity for the Canadian market. And now we're trying to build this little rising bottom in the Canadian dollar. If we can break this little downward trend line, maybe the Canadian dollar starts to make a bit of a recovery. If oil continues to recover, which I'm going to show you that chart in a moment, that may help. Interest rates, you can see that the bond market continues to be in an upward trend. We've had lots of volatility, but given that we are up in this area, that means interest rates are low. And so if you want to take out some debt, well, it's probably going to be cheaper than it was a month ago. Commodities, there's the gold chart. We've had lots of volatility. Not easy to trade gold these days. It's been very choppy up and down. It's gotten fairly quiet the past week, but I don't see great trading opportunities in gold and gold stocks yet. A lot of people think there should be because gold is often a hedge to uncertainty, but it's not that way these days so much. I don't see great opportunities trading gold. That may change next week, but for now, it's very choppy and not really trending very well, so I'd avoid it in general right now. Now, oil is an interesting chart. Obviously, it's been decimated. Some talk toward the end of the week was that we may see some production cuts between Russia and OPEC, and that gave a little bit of support to the market. We broke this little downward trend, but notice we have not made a rising bottom. And so my expectation is, although we've got a little bit of strength here, we probably need to pull back and make a rising bottom and then work on getting back to that longer term downward trend line. So I'm encouraged by what I see in the oil chart, and there've been some decent opportunities short-term trading the energy sector, and I think that'll continue. But you got to be nimble because it's going to go up and down, lots of volatility. So if you can't watch the screen too closely, I would be pretty cautious and and not expect that it's going to be a stable, quiet market near term. There's going to be lots of volatility. And finally, the fear chart. We always like to look at the VXX. It tells us whether investors are running with or trading with fear. We absolutely had that. It's quieted down a little bit, but it's still very elevated from where it was. And again, if this can break down through this floor, that means stocks are probably going up. And if it can break out through this $50 level, $55 level, that means stocks are probably going down. And this is a vehicle to trade if there is more of a market crash, to take a look at that breakout on the VXX as a way to make some money from the market going down. So my ratings then, I'm neutral on both US and Canadian stocks, both long-term and short-term, simply because they do seem to be stabilizing and they're going sideways. What we want to watch for is what's the next break from that sideways trading range. Gold, neutral both time frames as well. I generally don't want to be trading gold and gold stocks right now because there's no clear signal on them. Oil, neutral long-term and actually bullish short-term. We've had a decent little recovery there, but don't expect it to last and don't expect it to be easy. There's going to be lots of volatility. Stocks are stabilizing at these dramatically lower levels than they were just a month ago. And while it has been less volatile the past few days, we should expect that the dramatic volatility can pick up at any moment. And traders need to use a very nimble short-term approach and watch for short-term breaks to predict the next move. Now, oil is recovering. That's encouraging. It's got lots of work to do. Gold is stable and not really trending and therefore not easy to trade. All right, now what I want to do is take a look at the Stockscores market scan tool. And this week, we're going to build our own scan. One of the things that I'm looking for is stocks that are heavily oversold, that have really been beat up, but are starting to show signs of bottoming. And you can build your own scan in Stockscores. Of course, you have to be a Stockscores member, and you can look in the website. You'll learn more about how to be a member of Stockscores. But I'm going to jump over to the website now, and we're going to build a scan. So what I want to do is, first of all, find stocks that have been really beat up a lot. And a simple way to do that is just look for stocks that are in downward trends. So if we go down to the momentum study calculations, I'm going to set medium trend to bearish. That means it's trending lower. And long-term trend to bearish. I'm not going to worry too much about the short-term trend because we may get some of these stocks turning higher. Now, number of trades, I'm going to set that to 5,000. So I want pretty liquid stocks. I'm going to slide up here, and now I'm going to go to the gain-loss function. And for gain-loss, I'm going to set it to at least a 5% gain over the last day. And I want it to have closed below or above, closed above the last or above the open on the last trading day. So we're going to make that a bullish candle. Now, one last thing I'm going to add is I could do by exchange. I don't think I will actually. If I was going to run this just on the Canadian exchanges, which I could do up here, then I might lower my number of trades from 5,000 to 500. We'll leave it at 5,000 for now. Now, if I want to use this scan over and over again, I can save it. So I'm going to set my scan name. We're going to call this one Bargain Hunting. I just made that name up. I'm going to click on Save Scan, turn that to yes, run the market scan. And now I can go back and do it again in the future. Now, it found 75 stocks that meet the criteria of this strategy. My next job is to look through those charts to see if they have good chart patterns. Now, I want to look at this on two different time frames. First, I want to look at the daily chart. Is there some sign of life? When I look at XSPA, I can see really abnormal volume, which is a good sign of life. I don't like that it closed very close to where it opened, so that doesn't really appeal to me. I want to see a little taller candle on the daily. Now, you may not be interested in 28-cent stocks. No problem. You can set the price filter to look for a minimum of $5 or a minimum of $10. That's completely up to you. Now, when I see something that I think has some potential, I'll zoom in on it, make it a little bit larger chart. If I think the daily looks okay, then I will change it to a 10-day chart and look for that pattern that I talked about at the top of the video, which is a break of the downward trend line from a rising bottom. And you see that we had that on QEP. Volume has been increasing, which means it's under some accumulation. So this is good. I'm a little worried about the resistance that's going to hold up right there, so I wouldn't give this a really strong recommendation. To me, if I was to rate it out of 10, I would give it a 6 out of 10. We can keep moving along and just look for, signs of life, stocks that have really been beat up, been decimated, and look for some indication that things are improving. And so far, most of these don't really look too attractive. But, here's an oil and gas company. I see that there's been sort of an attempt to bottom out at 50 cents. It's starting to move up. Okay, now let's take a look at that 10-day chart and see if it broke a downward trend line from a rising bottom. I see that this stock did that yesterday. And so there's the downward trend line. There's the rising bottom. There was the break yesterday morning. It's up a little bit more now. It broke again from a decent pattern today. It probably will stall at that resistance level at 82 cents. To be able to do all this, you need to know how to read charts. That's something I can teach you. If you go into the Stockscores website, into Trader Training, go to Learn How to Trade. You can learn all about the different courses we have. I'm also, during the day, walking you through the market each day. That's the Active Live Trading program, and that's a monthly fee. Normally, you have to have a prerequisite course to participate in Active Live, but for the month of April, anyone can participate for a fee, but it's a much lower fee than actually having to buy the prerequisite because, again, as I said last week, I'm trying to get as many people involved with the market because I do think there's a tremendous opportunity right now. And if I can help guide you through the day, teach you something over the next month, I think that that's good value for everyone. All right, let's take a jump back into the Stockscores presentation here and look at the day trade of the week. Of course, we can make money from markets going down as well. And we had a bit of a sell-off again on Friday. And so what we look for are bearish action candles, which is what happened right there. That's one of my indicators that I run in TradeStation. These are the kind of trades that we look for in that Active Live service. So it's a short sell right there at $51. For $100 of risk, we would short 70 shares. That is a $7,650 position. But because we can use margin, you can divide that capital requirement by 3, so it actually only requires $2,550, and it earned at the close a 4 times risk, although it went down as much as 7 times risk. So at very best during the day, it made you $700 for every $100 of risk. By the end of the day, it was making you $400 for every $100 of risk, and that was a 15% return on a 1-day hold. Well, I hope that you've enjoyed this week's Market Minutes. Again, subscribe to the channel, hit the like button, leave a comment, turn on the notifications bell, and most importantly, trade well.